All right, so after missing out on the Santa Claus rally, the S&P 500 picking up some pretty good traffic this month, 3 sessions in. Listen, this is very important for many old-time market watchers. The so-called January effect is actually coined by Stock Traders Almanac back in '72. It's got an uncanny track record for predicting how the rest of the year will go, particularly based on like the first week and then the first month of the year. My next guest agrees. He says this is critical. I want to bring in now Howard Capital Management CEO and Portfolio Manager Vance Howard. All right, Vance, so why are you such a believer in this?
Well, it goes back to 1950. Now, the odds are incredibly high. If you look at January, you have an up January. You have a 73% odds we're going to have an up year in 2026. If the first 5 days of January up along with January, your odds increase to 83% that you're going to have an up. Now, look. If we don't have an up January, Charles, I don't want to go there. So
you're not going to quit for the rest of the year, though.
No, I'm not. I'll keep trading hard.
What do you think accounts for that, though?
You know, I think that when you look at what was happening in the year before, it continues to push forward. It's almost a momentum trade, to be quite candid. Usually when you have a down January month or first 5 days, you usually had a bad year before, so it continues to carry forward.
Let's talk about this year. So your target, 7,800.
Yes.
Your target last year was 7,000. You came damn close. You were more aggressive than most folks. So Goldman talks about this year and the fact that most of the gains will be driven by earnings, right? 26, and that was the case last year. So if that's the case, and Wall Street, two things. Wall Street's looking for the market to be higher, but I think the targets are very conservative. What's the chance of getting maybe some multiple expansion here?
I think you're going to get multiples. I think earnings always drive the market. They always do. So that's not a question anymore. But I think this year is going to be the year of the technical trader. I think it's not going to be fundamentally driven. I think it's going to be technically driven. If you're looking at breakouts like cup and handles, we're starting to see some really great cup and handles. I heard your last guest talking about NVIDIA, Meta. Who doesn't own that? We all do.
Right.
We're going to have to start to look at other places of the market so that we can outgame the S&P and that we can add some alpha to our portfolios and increase our value and increase our profits.
I want to ask you then about the AI trade, because the AI trade has broadened out, right? I mean, if you look at these chips, what's happening, SanDisk up another 20% today, up 550% last year. I mean, so there are niches, of course, the energy part breaking out. So AI, it's going to drive investments, it's going to drive GDP, and to me, that feels like, I know it's a key story here. You still have to have exposure there, don't you?
You have to have exposure there, and we do. We've got a lot of exposure. Even if you're an individual trading, buying NVIDIA, that's great, but you probably have exposure through a mutual fund or an ETF, so just about everybody owns NVIDIA. But I think you start to look at what the old gold miners, where you bought the supplies, not the gold mine.
Right.
And I think there's a lot of different companies that are going to benefit dramatically from AI that can ride off of NVIDIA's coattails. All
right, so let's talk about some stock ideas here. Yeah. I want to go to that. Because you've got a lot of things you like, including NVMI. Now, this is not necessarily a household name. Beautiful chart, by the way, it's breaking out. And this gets back, right, to semiconductors and the materials, right?
And it gets back to technical trading. Look at the fantastic cup and handle. This is a great William J. O'Neill cup and handle. And as you well know, and I know from trading technicals, this is one of the most powerful breakouts you can have.
This is the cup and the handle right there.
There you go.
And now we're breaking out. We held above the key moving averages.
Yeah.
And I mean, this kind of a chart, when you get that kind of a breakout, do you expect another 5–10% almost automatically?
Whenever you get a breakout like this, Charles, usually institutional pushing it higher. That means the retail investor can ride off their coattails and make a quick 5–10% pop, and they can trade it.
I love being positioned before the big boys. All right, let's talk about Google, because this is a name that you do like. You just mentioned a minute ago. Beautiful looking chart, although it's moving a little sideways here. Last year, they were crowned the winners. First, they were going to lose. Search was dead because of AI. Now they dominate AI. It's the winning story.
It is. And there's not only fundamentally are they doing well, but look at that flag pattern that it broke out of. Again, technicals. And I think you look at basic materials, you think, I mean, look at Bitcoin. It's sold off to the point from a technical standpoint, it's way oversold. For a trader's bounce, is waiting for you.
Well, we're going to bring up IBIT because you like IBIT. I'm not sure what's going to happen in Venezuela and how much Bitcoin is over there, but we're getting that turn, right? This is the turn you're talking about. And listen, anyone who's been in Bitcoin for more than 2 or 3 years, they can deal with this kind of volatility, but now people are saying, is this to buy? Because buying Bitcoin on the dip has been money for 10, at least a decade.
It has. But you made a key word there. You talked about the turning point, the tipping point of the turn, catching the turn. That's incredibly valuable to a technical trader who's trying to catch that turn. And I think you're catching it here. Venezuela's helping a little bit. Gold's going through the roof because of Venezuela. You know, you got the central banks are buying gold and pushing gold higher. Lots of technical reasons to start trading really hot and heavy for 2026.
So, okay, we got you.
All right.
You killed it last year, so we're going to need your help this year, too.
Trade
Thanks a lot,
hard.
Vance. Appreciate
Trade
it.
hard.